All right. Well, let's talk about companies here. Again, we're talking about LPL, Deckers, Apple, and Delta. Going to start off with LPL, which is a financial company here in San Diego. They're in the industry of capital markets. Not much on the short side, about 1.5%. Very high institutional owned of 96.7%. Not a great start in the PE ratio. It's 20.2 versus 15. Price of sales 1.7 versus 2.2. That's a positive. Price to book value not so good. 7.7 versus 1.6. Price of cash flow, oh my gosh, very expensive. 76.8 versus 18.7. The only good thing I see so far is a good PEG ratio, which tells you how much you're paying for future growth, is only 0.8 versus 2.0. Now, look at their earnings over last year. They were up only 5.6% when the industry was up 46%. Sales did do better, though. Sales climbed by 18.3%, about twice the industry at 8.8. And the 5-year growth rate, this is surprising to me, 20% on the earnings per share growth from the analysts versus 12.1 for the industry. So that's a high growth rate for LPL, and we'll talk more about LPL, why I'm surprised on that towards the end here. They do pay a very small dividend. What do they use? 0.4%. Why even bother is always my opinion. But that's about 9% of their earnings. So that's disappointing to see that. Current ratio 1.6, double the industry of 0.8. That's good. But debt to equity is high, 2 versus 1.7. And we do get a little bit nervous when debt to equity gets above 1.4. Net profit margin, not very good, 8.6. That's half the industry at 15.5. Return on equity, however, very good, 36.1. We like to see a number around 15 or higher. And return on capital also looks good, 17.2, and that includes debt when you look at return on invested capital. Chase, what do you got going forward?
A lot of numbers, a lot of thoughts going through my head here. Current price for LPL Financial, ticker symbol LPLA, $283.31, 52-week range. The low here is $187.19. The high, $384.04. And I gotta say, I'm just blown away. I mean, their 1-year return is up about 10%. Year to date, the stock is down, looks like about 13%. I'm not sure if that includes Friday's decline of 9%, but the 5-year return, holy cow, 435%. The 10-year return, 668%. I mean,
wow.
This stock has done phenomenal. Looking at the numbers here, though, I mean, they've had a little bit of a rocky time even before these tariffs took place. They actually fell about 6% after an announcement to purchase Commonwealth Financial Network for $2.7 billion in cash. The deal is expected to close in the second half of this year. And I was like, $2.7 billion, it's a big number, but for somebody like Schwab, that'd be nothing.
Right.
For LPL, their market cap's only about $23 billion. That's a pretty sizable acquisition there for the company. I was kind of surprised by that. And then, too, I see that they are pricing, a $1.5 billion worth of shares. So while it is a cash deal to buy this, what's the name of it, Commonwealth Financial, they're selling their own shares to raise cash to buy that. I generally do not like to see that.
No, so they're not using their shares to buy it. They're selling shares to raise the cash to buy it, which is
essentially the same thing. It's diluting shareholders at the end of the day.
Right.
Looking forward for this company, though, I go out to December 2026. I see estimated earnings per share of $19.94. It gives us a target sell price of $331. That's an estimated gain of around 17% from the current level. And I'm pretty surprised by the earnings growth. I mean, this year you're looking for earnings growth of around 14%. Next year, estimated earnings growth of 25%. I don't know what this company's doing, but it is growing earnings.
Yeah, and actually the numbers I have, because we use a different one, I use a different one than you're using, they show earnings for 2026 of $22.75, which gives you a higher target sell price. And we do have experience with LPL because I was actually with LPL. Gosh, I think I started with them back in 1993 as a broker. That's where I went to from the bank program I was at. And with them for quite a while. We still have a few $1 million left with them, but dealing with them on the inside, they've been very difficult. Maybe our business didn't fit for them, but we had about $100 million with them. And gosh, everything we tried to do with our operations people like, can we leave LPL? There's so I'm like, okay.
Because I do see that they offer an integrated platform of brokerage and investment advisory services to independent financial advisors and financial advisors and institutions in the U.S. I believe that's obviously what we are part of. They also have brokerage offerings, including variable and fixed annuities, mutual funds, equities, fixed income, alternative investments. Retirement and 529, education, savings plans, and insurance. Client cash programs consist of FDIC, insured bank sweep vehicles. I'm not sure where they make their money. Like, I know what Schwab, they made most of their money
Right.
by using cash and then using that cash to essentially invest. I don't know if LPL is the same thing, where a lot of their profits are coming from. I mean, there's no denying they have profits, but I'd be very curious if I was looking at this stock, where does that profitability stem from?
And being with LPL for as long as I was, I mean, I did notice, and I don't go to their conferences anymore, but it was like always packaged products, annuities, insurance sales. So they tried to fit the, I don't want to say quick sell broker, but the broker that is actually doing selling, not like we do a lot of the analysis and so forth. And we have a lot of transactions, and it seemed to be they just couldn't keep up with it. I mean, we do a 401k business. Gosh, that was a nightmare with a 401k. We actually lost a big 401k client because of them. So I'm happy for them. I mean, I know some people there that are great people, but gosh, I just don't get the operations of their business. And based on our personal experience, I would not buy the stock.
Hard to compete against Schwab, Fidelity. Yeah. I mean, both of those are very large competitors.
Yep.